For those that aren't as familiar with our firm, we are an early stage venture capital firm rooted in economic inclusion. How that shows up initially are through our two primary investment themes. On the B2B side, we focus on what we call SMB tech, so tools to support the next generation of small business owners. And then on the consumer side, we focus on what we call culturally aligned consumer, which refers to companies building scalable products or services that are targeting overlooked communities and customers. We're typically leading pre-seed and seed rounds, in addition to our friends and family accelerator, as Mickey alluded to, which I know we have some folks from the current program on with us. So it's always good to have good to have them on with us. And we're leading with checks between 1 to 2.5 million, and we're investing across the United States. Our first fund was 75 million. We made 38 investments from that. Our second fund will be 100 million, and we have 75 million of that closed. So we're actively deploying capital and making new investments. So the framing of this conversation again is around a data room, and we wanted to kick things off with quickly introducing what is its purpose, what is it, what isn't it, how important is it, and so a couple of notes here, and maybe just to take a step back, a data room is at the end of the day a place to store files, kind of at its basic level. Um, those files are intended to be shared with prospective investors that you are having conversations with about investing in your company. Um, so that's at a super high level what it is. It's a Google Drive, a DocSend, a Dropbox, whatever, Airtable, whatever you prefer. That's where somebody can go to find it. Some folks are very cautious with how much information they share. So some folks password protect things, and that's not a negative thing. That's fine. But at the end of the day, it's a place to store documents. Now, when it matters is, again, when you're having these conversations, you're typically not going to share a data room just as you meet somebody. It's typically too much information at that point. What you're trying to do at the initial stages of getting to know an investor or a firm is understand if there's a mutual connection amongst both parties, you, the founder or founders, and that firm. And you typically do that through a set of interactions, conversations, meetings in person, virtual. And after a certain point, assuming that you're fundraising, you should be in the driver's seat, meaning if you are fundraising, being proactive about understanding what their process is, what questions they have, what questions they need to be answered so that they would make an investment decision about investing in your company. And it's at that point, after you've had one, two, three conversations, that either they will ask for a data room, or you could make it known that you have one prepared to share. That's always, if they haven't asked for one, even indicating and signaling, hey, we have one, is a very small signal to say, hey, look, I'm prepared. I know what I'm doing. This leaves aside what's actually in it, but at a minimum, you're signaling to that investor, I I'm prepared. I know how to run a process. By run a process, I mean I'm organized. I'm having these conversations with investors so that I ultimately end up with an investment offer so that I can get the capital that I need to take my company to the next stage that I know it can go. And I want this firm to be a partner in that journey. So some firms call that sort of nebulous stage of diligence after you've had an initial set of conversations. An investor is going to do research, another word for diligence, and figure out, is this opportunity as big as the founder says it is? Do we understand what the product does? So those questions that are looming in the back of the investors' heads, the pitch combined with the data room should help aid them in their research, their diligence process to ultimately come up with a decision about, we are excited about what this founder is doing. We're excited about this product, this space. We want to invest. Or depending on whatever they find out throughout that process, they decide not to, and ideally that is communicated as to why they are choosing not to move forward. But again, it's a document, or sorry, a repository of documents that you're going to be sharing with investors at some point in your fundraising journey. And the purpose of this conversation is so that you all, whenever you are in that phase are as prepared as possible and put your best foot forward so that the investor is impressed, and you are able to effectively and efficiently move through their investment process and be successful in fundraising. This third point, not all investment firms write an investment memo. What that just means, it's an internal document so that we are consolidating all of the information that we're learning through conversations, through customer interviews, through um, using the product, etc. We're consolidating that in some sort of document that we're using internally as a tool for our internal discussions to assess the opportunity. And so it's typically, at least for us, right before we are going to go to that step with a company, which typically happens after, at a minimum, 2 or 3 conversations, we're asking for a data room. Unless the founder has already preemptively shared one or indicated that they have one, and maybe we said, okay, please go ahead and share one. But again, at the first onset stages of a working relationship, you don't have to share. Sometimes it might be too much, and the reality is investors are talking to dozens and hundreds of other companies. And so we're not going to actively look at a data room until we know that all of our team is at a minimum sufficiently bought in to move this forward. And then the last point, again, whenever you are interacting with an investment firm, you want to put your best foot forward. And one way to do that is not just to have a data room, but to have it organized. And we'll get into what data room, what we recommend is in it. But the fact that it's organized are small signals that go a long way in telling that investor, hey, this founder is organized, they have data, they are making data informed decisions. Um, again, a very easy, low lift way to get across that you are the right type of investor, the right type of founder that an investor wants to work with. So maybe we'll pause here to see if there's any questions on any of these topics.
Hello, I have a question. I'm not sure if we're going to get into this a little bit later on. I'm pretty sure we are. Like, what kind of things are supposed to be included in the data room? And if once somebody gets a data room, is that a strong indication that things are going to move forward, or do folks just ask for data rooms to kind of mine for more information on other investments they might make?
Sure. Yeah, thank you. I'll answer your second question first, and then the first question I'll answer with the next slide. In terms of what kind of indication it is, I would say it's a positive indication. If I had to put a statistic on it, I would say your likelihood of getting an investment offer if a firm asks for a data room is somewhere between 30 to 40%. So it's by no means like they're going to make an offer, um, as opposed to another signal, which is them having customer references. Should you have a product that is being used by customers at that stage, if an investment firm is doing that, that percentage is probably more like 70 to 80%, because at that point they're interested enough to spend more of their time and precious time of your customers that you're having to actively reach out to. So that hopefully answers your second question. And then on the first question, we'll get into the next slide and touch on what we recommend including. Some founders include additional things. So we would actually welcome you if there's something that's more specific to your company or vertical or sector that you think would be relevant, or have already shared with investors, depending on your fundraising journey. Feel free to drop that in the chat or share it. But we'll touch on these briefly, and actually the first two are ones that we're going to get into a little bit more in depth, because really they're the most important ones, if you will. Here we're generalizing a little bit because you're going to have to adjust your data room based on where your company is at that point in time that you're fundraising. I.e., if you have an active product with active customers, you're growing a lot, you're going to have more data than somebody who is pre-product, pre-launch, even pre-team, if you will. So depending on where your company is, your data room should reflect in some way that stage. That said, you can be proactive with talking about product roadmaps and hiring roadmaps and whatnot. But at a minimum, you should have a pitch deck because that's what you're using typically to get folks excited about what you're building and have a conversation with you either in person or virtual. So that's standard. Uh, Make sure that that pitch deck is short, sweet, to the point, which actually takes more work than one would assume. Sometimes we actually even recommend some of our founders to work with deck designers because while it is an upfront cost and investment, it can make your jobs a little bit easier in terms of focusing on building the relationship, building the company, etc. So we'll get into that in a second. And then the second piece is a financial model. Even if you're pre-product, pre-launch, at a minimum, the financial model, and we'll get into this in the next slide, should at least show and indicate what you plan to do with the funds that you're raising for. Like if you don't have a financial model and you're just saying, give me $2 million, the investors and the investor doesn't know what you're going to do with it. Like, how long is it going to last you? Who are you going to hire? Are you assuming you're going to pay a software engineer 50K? Like, if that's in the US, that's not wise of you to think that because that's not US prices. So it's at a minimum a way to understand how you are thinking about building the business. But again, we'll get into those two in the next slide. These other points, again, will depend on where your company is, but strongly recommend including demos. This probably goes a little bit further for B2B companies because um, if you're a payments platform for a business, we could use it, but we would probably just prefer to see a product demo as opposed to a consumer product, which you can download on the App Store or you can sign up for on the web on your website and start using immediately. You don't necessarily need a demo, or depending if you have different types of users on your profile. So maybe, for example, you're a marketplace and you have a seller side and a buyer side, and you want to show 1 or 2 minute demo about how that user is interacting with the platform based on their profile. You could do that as well. A product roadmap, we want to understand where the product is today, but more importantly, if you are successful with raising the capital that you are aiming to raise, what do you plan to do with it from a product standpoint? Are you going to launch new products? Are you going to turn on monetization? Are you going to do X, Y, and Z? You're going to turn it into a different language or something. We want to understand what is your vision of how to create a product that people want and not just want to use, but want to pay for. On the hiring plan, again, depending on where your company is, it might be just you, or it might be a couple of folks on the journey with you. But more than likely, if you're raising capital, you're going to be hiring some folks on, whether that's people that you have currently working with you in some sort of contract or part-time basis, converting them to full-time, or completely hiring ahead of blank. And we want to understand what is the plan for that hiring? How are you thinking about it from a timeline perspective, from a cost perspective, from an equity perspective, because you're presumably going to be using equity as a lever to entice people to join you on this journey at the early stages of the company. And the next point is around a cap table. Depending on where your company is, I mean, if you haven't raised a lot of capital before, you don't have to include this. This becomes more meaningful whenever you've raised two, three, 500,000 plus from different folks, different sets of groups, and your cap table gets more complicated. We want to understand how much capital you've raised, from whom, to understand what dilution would be should you raise the capital that you're aiming to raise. So that cap table would serve that purpose. And then the last thing would be an FAQ. So presumably you're fundraising, you're having numerous conversations with investors, things are going well, but maybe you keep getting 3 or 4 questions, or maybe you keep getting the same question from 3 or 4 different investors. That's probably a signal that you should be addressing that point up front, probably in your pitch deck and or pitch if you're not using a pitch deck to pitch the investor. But maybe there's other 1 or 2 one-off questions that somebody might have that you're like, I would have never thought about somebody asking that, but it's not a bad question. And so you're going to throw that in your FAQ. And I guess the beauty of an FAQ is that it can be you can continue to build that out as you're having conversations. So you can do it in Airtable, Google Doc, and it's really helpful at that investment stage because an investor can, I'm not saying that we do, but can over diligence a company, meaning like ask a ton of questions. And sometimes you might already have the information available in your data room. They just might not have seen it or overlooked it. And so you can point to, hey, thanks for the question. It's actually, we addressed this here, in a respectful manner. So continue to build out an FAQ. Sometimes founders do their own investment memo and or an investment manifesto, which which means different things, but it's basically sort of a written doc that is saying why this is an exciting opportunity and presumably addressing all of the points that that investor would be diligencing from a team, product, financials standpoint. You're basically doing it ahead of you're getting ahead of them and saying, hey, look, I'm gifting you this information so that you can do what I know you're going to do with it. And I'm going to speed up your process. Other helpful documents that we would recommend including, again, depending on where your company is, but some of these could be relevant regardless of the stage. Customer testimonials. Um, if you have if you're on the App Store, then people where founders or investors are going to look to see what folks are saying. If anything, but otherwise, it would behoove you to get a couple of clips, just verbal or written, whatever is easiest, from customers and to talk about why they love the product and why they continue to use it and pay for it. Market analysis, especially if you're in a sector or an industry that that investor might not be as familiar with. So some folks like us, at the end of the day, we're generalist in that we're investing across sectors, across industries. And so I'm going to hope and assume that you know more about your sector and industry than I know. We collectively know a little bit about a lot of industries, and so I'm going to be asking questions about number of potential customers, pricing, etc. And you should know your information and know your industry. But this market analysis document could help educate that investor should they have additional questions, understanding who the competitive landscape is. Typically, that's going to be a slide also in your pitch deck, but this could be an opportunity to further expand and add details there. And you, again, to the point of an investor should not know more about your industry. An investor should also not find competitors that you don't know about, because that's not a great signal. If you think your closest competitor is X, Y, and Z, but then I actually think it's A, B, and C, and you haven't even talked about them or don't think about them as a competitor, that's probably a question or a conversation that somebody's going to have. The next bullet is around references. So here you don't have to put your references information, but it would be helpful to preemptively show that you have people teed up that are willing and able to have a conversation with an investor should they want to have one. Um, Again, the question that we had earlier, at what stage would this happen? More often than not, again, every firm is different at the end of the day. Some people might do it really early on, but this is probably whenever an investor is meaningfully interested in potentially investing so much that they're going to use their time and your customer's time, which is obviously and your time to facilitate the introduction to have that reference call. Unsurprisingly, the investor will be doing their own set of references without, people who you're connected to, depending on where you worked or who might know you. But then also trying to talk to potential customers, folks that maybe not don't have, or haven't heard of you, but are in the industry, again, to really validate, is this a need that people have? But from your standpoint, showing or indicating that both from a customer and or personal standpoint, depending if you don't have customers, because you're pre-launch or pre-product, if you will, understanding that people are willing to vouch for you and speak to investors if they want to do that. including any press coverage. We're going to look for what's been published about you or the company, but getting ahead of that and organizing it can be helpful. Depending on where your company is and if you have investors currently and you've been sending some sort of regular cadence of investor updates, whether that's monthly, quarterly, you can include those. That's a very transparent way to show, hey, I'm open. Like this is all that you're getting. I'm not sugarcoating anything. I'm not hiding anything. This is information that you can see and understand the evolution of our company, depending on how long the company has been around. Could include that. An org chart, depending on how big the organization is currently or plans to be post raise, which could complement the hiring plan. And then the last point is just legal documents that are going to facilitate whenever you receive an investment offer. So articles of incorporation, other term sheets that you received, maybe partnership or sales contracts or sales pipeline. Actually, that would be more in another document that you could include. But contracts that you have with any current customers, maybe you just have one customer and it's the one that you want to highlight because it's going to be representative of future contracts, including this here as a place so to show that you organized, you have things ready to go. Because the worst thing that you would want is reaching a stage where you have an investment offer and then the legal process just ends up taking much longer because of unforeseen circumstances. You can't find a document, your accounting is not squared away, your lawyers are on vacation and they can't be reached. Like you want to have these documents squared away. Last thing I'll say on the slide, and one small thing is you don't have to some founders are more sensitive about what they share with investors. And so and then sometimes the founder might just share two or three things. So what I've seen is like they might have a Slauson data room and they're basically just copying and pasting things into that room. And then as we're progressing along the process, they will actually be sharing more stuff. Maybe we give them an offer and they're like, oh yeah, we have all of our legal documents. I'll put them in the data room. So depending on how much you care or not about what investors have access to, you can easily or yeah, put things into the data room over time. You already have it on your end. You're just sharing access to it. But again, having it organized will go a long way. I'm gonna pause here to see what questions come up for folks.
Jesús, I have a question for you. You mentioned that sometimes founders get a little nervous in sharing materials with investors, and I think we can all agree as to things we've seen in the headlines or whatnot as to why. Is there a proper way that you recommend for those that are shy in sharing these materials to kind of either create a plan of how to roll it out or how to share that feedback or go around it?
Yeah, sure. So like a couple of different approaches, and I mean you shouldn't not do something you shouldn't not do something you're not comfortable with, but by the same token, you got to share information. So one way to do that is being very explicit with that investor and saying, hey, I have a data room with documents. Could you please let me know what documents you need to see or have access to? So basically making them tell you what they want access to, and then that's only the things that you share. Again, hopefully, and then even if some of those things are things that you're still more sensitive about, I guess another question would be, I'm open to sharing them. I would love to understand what stage in the investment process I'm in and what the timeline would be or steps would be for a potential offer so that at a minimum you have oversight into is it 30 or 40% or is it 60 or 70%? They're probably not going to tell you a percentage, but at a minimum you have a little bit more insight into where you are in their process versus sharing and then worst case being ghosted or I guess another worst case them passing and then something happening where you see some of the headlines. I mean I will say we hear of stories where folks shared things and that investor did not good things with that information. That is in the minority of cases. It doesn't not happen. But more often than not, it doesn't happen. And a big reason is sort of this social contract that at the end of the day, founders talk, investors talk, and our reputation as investors, similarly as founders, matters a lot. And so we don't want a founder to have, I mean, founders are our customers technically, and we don't want somebody to have a negative interaction with them, even if we don't invest. Um, and so we are very mindful of, for example, if we have we don't invest in competitive companies or companies that are building the same product for the same type of customer. And so we try to preemptively share, maybe that founder doesn't know because they're in stealth. So we would say, hey, we have an investment in this space. This is what they're doing at a high level. If you don't feel comfortable continuing the conversation, we understand that. But even if they do still have the conversation, which oftentimes the founder will still want to have it, um, we don't share information with our company, our portfolio company founders. I mean, again, that's not going to help us in the grand scheme of things. So, but indirect question, but really trying to just get more clarity from the investor and or be specific about what they want to see.
Yeah, I like that. That's really good strategy. I think for me, being selfish in the time right now, I'm thinking about the AI side. And like if you share too much of that tech stack, it could be like a liability. But really, really good feedback there. So thanks.
Thank you. Alrighty. We'll jump into the next slide. Just two more. And we'll dive a little bit deeper into two of the primary ones that we strongly recommend. One being the pitch deck, which is sort of an obvious one, and then one being the financial model, which is maybe a more non-obvious one depending on where you are, but really goes a long way. So the pitch deck, sometimes folks have a shorter version of a deck and then a longer version of the deck. Well, the longer version maybe has a lot more appendix slides or just goes more in depth on a couple of different topics or areas. That's fine. You don't have to have a longer deck, but at the end of the day, the pitch deck is sort of typically the number one, sorry, the first interaction that you're going to have with an investor. So you really want to put your best foot forward and have it not be in a worst case confusing, and in the best case really exciting, interesting, getting that founder to want to engage. And again, shorter is always better. We see 40, 50 slide decks, and the reality is that's a lot of slides, and investors, for better or for worse, have short attention spans. So you want to catch their attention as quickly as possible. The the deck should also complement the other documents that you have. So the financial model there's probably going to be some slide on your pitch deck that talks about your projections and your milestones that you're tracking towards, which probably ties to your well, not probably, it does tie to your financial model in terms of whom you want to hire, what revenue goals you're setting for yourself, how much runway you plan on getting with the round that you're trying to raise for. So you're just sharing this information in the spirit of transparency, and it's not necessarily for that investor to judge what it is that you're doing, but more so that for them to understand what it is that you're doing, but then also question in the spirit of, have you thought about this? Have you thought about that? The reason I say that is because if an investor is doing diligence, our job is to make investments. So we want to move that forward, your company forward in our process if we're interested. And ultimately, if we do make an investment, we want to understand what we're getting ourselves into in terms of who the team is, where the product is, where the gaps are, so that we as a firm can actually support you with what it is that you need. So I say that to say, don't feel like you need to, in an extreme case, lie, but over embellish where things are. Like if things are where they are, present them as such, and leave it up to the investor to ask questions, to 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 dig further into certain topics, because again, they're wanting to make a deal happen. Whenever we go into any pitch call, we're assuming, or our mentality is this going to be an investment that is going to make our fund and our firm massively successful? And so we have to have that mentality of what what is the company? What is the company not doing? And then how can we support with any potential gaps? Should we choose to invest? So um, yeah, balance brevity, practice makes progress. And if you have things that you want to address, but you don't want to put them in the pitch deck because it's getting long, an FAQ can help that. And you can also link an FAQ or link any documents in the pitch deck or in the initial blurb that you're sharing with investors, so that should they want to dig further into something ahead of a conversation or even post first conversation, they have access to it. Or you can quickly follow up after a first or second call with links to an FAQ or a data room, etc. So on the pitch deck, I touched upon, you can have additional slides in there, and we think that that's a very smart way to do it, because let's say I have a question about more questions about market size or more questions about product roadmap that you didn't want to include in the initial deck. You just flip to an appendix slide as you're having the conversation with them if it's on Zoom, and you address that head on. And sometimes folks are more visual than not. So having that up front can go a long way. Here's some slides that we recommend at a high level are included in your pitch deck. Generally speaking, would recommend for it not to be more than 12 slides. And that might sound like a little bit or a lot to some folks, but we found that trying to be more concise and succinct is actually even harder, but goes a long way in terms of getting interest. And then the financial statement, um, financial model, if you're generating revenue, including any historical information around your finances, your customer growth, if you've even been around for 1 or 2 years and you actually have financial statements, maybe even audited ones, you can include those in there. And then on the third point, from a financial model or financial statement perspective, it's not just about the dollars. Your financial model should also include the non financial KPIs, meaning users, customers, growth percentages, etc. So that, I mean, it should be the document that you're actually using to drive your business. It shouldn't be like an investor financial model. It should be what are your assumptions? What are you aiming to accomplish in the next 1, 2 years? And how do you plan to get there from a yearly perspective, but then also from a monthly perspective? So we'll pause here because we're coming up on time, and I want to make sure we have questions, leave time for questions outside of the data room.
What do you think looks best, Google Drive or Notion in terms of presentation?
I would say do it where you're most comfortable with. If I had to choose, and this is not a strong preference, I would say Google Drive, and then after that, maybe DocSend, and then last, maybe Notion. But again, it really doesn't matter. Like, what matters more is the content and how organized it is. But yeah, don't feel like you have to create a new account somewhere. Just whatever you're already using is probably enough. And then I think that there are small, creative, unique ways to be even more organized. So again, like sometimes, and by no means is this going to move the needle, but it's like a nice to have. Like we see, I mentioned earlier, a founder might do like a Slauson data room. So presumably, I think that they just copied their base data room into it and just copy that over and then change the name. Or sometimes we see somebody with a pitch deck that says like Slauson pitch deck or something like that. I mean, that just kind of shows that you're even a little bit more intentional than the average founder, which again, that's not gonna mean that they're gonna invest in you, but it shows that at least you're a little bit more intentional and or at a minimum organized. We'll jump into the last slide here. So on the first point, we've touched on in a couple of different ways, but you want to understand when is best to share that data room. You put a lot of work, time, energy into all these documents. Now you want to show the world that you have them, and hopefully you're sharing them because you want to make someone's process as streamlined as possible so that they can get to a yes. And you're trying to help them help you by having this data room that is organized, that is effective, efficient, etc. And you can signal early on that you have one available in a very passive way, whether that's in the blurb or in the deck, just on the slide somewhere, data room available upon request or something like that, or just on the conversation at the end. You can ask, hey, I'd love to understand what your next steps are. I have a data room that I'm excited to share if it makes sense. But again, every investor's process is going to be slightly different. And so some people might not, some people might say, hey, that's great. We'll let you know when we need it. Or some people might say, hey, please share with us. They might not look at it until two or three more conversations, but showing that you have it it's a small signal, that positive signal early on. That's the second point as well. Again, these are small ways that you can, and that's what, at the end of the day, what investors are looking for in sort of what kind of founder is this, i.e., they're unresponsive. And we asked for a data room, and it took them, I'm exaggerating, but like a week and a half or 2 weeks for them to respond. Like, unless something, an emergency happened, if it unless that happened, you're okay. But if it's just the kind of how you run your business, that's reflective. That will be reflective, and the investor will take note of that. But you want to be as prepared, which is, I mean, all of you will be because you're on this conversation, and showing that you've done your homework, you've done your research, and you are a world-class founder that they should be taking seriously and considering for investment. And the last point, again, depending on the round that you're raising, I think we have on our Slauson Spaces a recording around pre-seed versus seed. If we don't, then we'll probably do that in one of our upcoming conversations. There's nuances with both, but depending on where your company is, typically I would say at a seed stage, if you're raising $3, $4, $5 million, you're probably post-product, post-revenue, and thus an investor is going to want to understand customer data, trends, customer analyses, and talk to customers, etc. Versus if you are really early on, you're not going to have as much of that hard company data, but that doesn't mean you don't have access to other data that has probably informed your the way that you're thinking about building the product, whether that's potential customer interviews that you've done, that you're sharing with the investor to show how proactive you're being, and that you really think that there's a problem that you're aiming to solve. But yeah, I will not have the same expectations of a pre-seed company data room as a seed company data room. So you just want to understand what's feasible and what makes sense for you. Pause there. That's all we had as it relates to data room, and we only have 10 minutes left, but I'm happy to answer any questions around data rooms or anything that might be top of mind, not related to data rooms, that you want to discuss in the next 10 minutes.
I have a quick one for like a pre-revenue company that's kind of been operating in stealth mode for a little while now, either due to having a day job and trying to build up the confidence to take that leap of faith. And when is the, maybe, I mean, there's not a right or wrong answer, but when do you advise, I guess, those maybe pre-revenue companies to start seeking out funding? Like when is too early, when is maybe too late? I'm definitely gonna go try to find that pre versus post revenue or seed round video if it is on YouTube. But if there's any insight you could provide into that. I would say I'm like a year out from wanting to do a full-on product launch, but I'm seeking out beta testers and things like that currently.
Sure. So a couple of things that I would think about it if I were you. One, sounds like you're still pre-product as well. Is that accurate? So one thing is thinking about where the product is and where you can get it to be. And then if that's not going to be where you would want it to be, given the resources, et cetera, then I would think about two things that are top of mind. One is the amount that you're trying to raise. So unsurprisingly, an investor is going to have more questions and be more skeptical if you're trying to raise $5 million, thumbs up, than if you're raising $1 million. Not to say that a million is going to be easier than 5 million, but if you understand what you're trying to accomplish with that amount, and typically I would think about the round that you're trying to raise as what are you trying to prove with it? So if you're pre-product, pre-revenue, presumably you're trying to prove that people will want your product and they will want to pay for your product. You're not going to need a 24-month plan to prove that out. You might need $1 million and 6 months. And at that point, if you raise that amount in 6 months, uh, it will launch and you will quickly have answers as to this current product is working or it's not, and do you have enough time to pivot? So one, thing about amount, and then two, think about team, because that will have a strong correlation with how much you want to raise. So it's if you have, for example, if you have a three co-founder team, you're the CEO, you have a CTO, and then you have a chief marketing officer, um, that is going to be, and you're raising a million um, for to launch that product in 6 months. That's different than if you are a solo founder raising a million to hire a technical person and hire a marketing person, because that 6 months is actually going to be 9 or 12 months because you have to budget time for hiring those people if you don't already have them identified. So thinking about team and if you're wanting to hire certain folks, how long it will take you to hire, and that will likely drive the amount that you're trying to raise. But again, thinking about it from what am I trying to prove with this capital? Um, so it depends on what stage your company is, but trying to think and put yourself in the investor's seat of why am I going to be excited about this? What is making me excited about it? The team, the product, some sort of like regulatory change that just happened that this founder has a deep insight into that no one else does. And they have to build this product because they're the expert in whatever field that they're operating in. And as an investor, I'm getting the confidence that they're going to be successful. They've also have two advisors that they've been working with for 4 months now that they're going to bring on full time. I'm giving you an example, but you just want to put yourself in the best light and perspective so that you're not giving that investor any reason to not be excited about working with you, and that you're raising the right amount for the right purpose.
Thank you. Super helpful.
No problem. Hopefully we have time for one or two more questions.
Is there a particular spot in a data room that you or Waverly or Mickey get like really excited to look into? Like, is there one portion of it?
My quick one is just I think demos go a long way. And especially if they're short. We see 10, 20, 30-minute demos. We don't see them. But like in the same way that it takes a long time to create a strong pitch deck, demos can take a long time as well. But a strongly executed one can go a long way. It doesn't have to be a commercial grade either, but I just want to know, what are customers paying for? How are they interacting with it? But I'll let Mickey and Waverly answer as well.
I would say in follow up to having a couple calls with the company and having hopefully somewhat of a good idea of the product, I agree with Jesus. I think demos can be really helpful. I feel like for our diligence, I end up spending a lot of time on market and competitive landscape. So I naturally gravitate towards any materials that provide more detail there. And I think that that can really help support the investors process as well.
Nothing really new to add. I think I was going to say the same thing as Jesus. Getting a better understanding for how the product actually works if it's not super clear in your deck, which I know it can be difficult with the limited number of slides, but I think video can definitely go a long way of just further expanding upon how the product actually works and how it's solving the problem that you're setting out to solve.
And just to piggyback off of that awesome question Omar gave, as far as demos, is it more impressive if it's a user demo, as in somebody that uses the technology and getting them to show on video how they use the technology and maybe include like a reaction on the back end of that? Or could it just be the founders just going through saying, hey, this is a tap sensor, this is how you attach it to the tech, and kind of just walking through a generic kind of demo?
Yeah, I'm trying to think about demos where we've seen a customer actually use it. I would say that's not the norm. It could be interesting, could be creative, so it could be a little bit more impressive. That said, I wouldn't want you to spend a ton of your time trying to do that. At the end of the day, like what we just want to see is how it works and that it's real and understand how people are engaging with it or using it. I'd say if you have customers that are using it, what would be probably even better to do is just having their testimonials. So you don't have to focus on getting them to be in the demo itself because you're gonna have to schedule that and like just from a friction perspective, that's a lot of work. So customer testimonials can accomplish that. And yeah, demos just want to see how the product works and or engage with it ourselves. But uh, in a lazy investor way, like we don't always want to sign up for a ton of new accounts for different things. So if I could just watch a 1 to 3 minute video, I'm going to do that versus like getting me to sign up, especially if I have to like share my financial stuff and like I don't not want to do that, but that's an additional layer of friction. And I might do that, but like probably whenever I'm in deeper diligence and if I after a first call, like, oh, this is pretty interesting. And here's a demo. I'm gonna watch that. And that hopefully will get me more excited and want to continue to engage with you and learn more about the company.
Got it. Awesome. And last question around intellectual property. Does that kind of give people a leg up when you have IP? Should you include that in the data room as far as the abstract, the claims, everything that's involved with that, or that also the type of stuff that's not going to get dug into?
Definitely include it if you have it. So yeah, any sort of IP documents in the legal section, throw that in there. And I would say from a high level, from a venture perspective, IP is important, but only in as much as it's relevant to the product. So if you have a hardware product, it's probably more relevant than if you're just building a consumer fintech app versus if you're building some new large language model or something of that nature in AI. So depending on what you're building, IP will be more relevant. But if you're uh, just in the sense of like you're not creating a new technology, you're creating a new way for somebody to access a new or access a financial account via again a consumer fintech product. You don't need any IP generally speaking for that, and so you're not going to be expected to have that.